Welcome to Level 1 Lesson 7. My name is RIA the Trader from tradingwing.net. In the last lesson, you learned about candlestick charts, which are a type of chart used in technical analysis. There are, however, different types of charts used by technical analysts, and in this lesson, you will learn about the various types of charts. So let's get started. The three most commonly used chart types by technical analysts when trading in the stock market are candlestick charts, bar charts, and line charts as presented in the images below. Since we have already talked about candlestick charts, let's move on to bar charts. Bar charts carry the exact same concept as candlestick charts, so whether you use a bar chart or a candlestick chart is simply based on your preference. In the image below, you will see an example of a bar chart. This example is slightly different than a candlestick chart. So how do you go about reading this chart? When looking at a bar chart, you will see multiple vertical lines. However, within these vertical lines, there are lines on the left side and on the right side. The line on the left side of that vertical bar represents where the stock opened during that specific time frame. The line on the right side represents what price the stock closed at during that specific time frame. And again, bar charts change based on the time frame that you choose. So whether you choose the 1-minute time frame, 4-hour time frame, daily time frame, or any other time frame, your bar chart will change. Now let's talk about line charts. Line charts are a method used to reduce noise and see an overall trend in an asset or a market. Noise is reduced by only displaying closing prices at each point. To better describe a line chart, it is a visual representation of an asset's price history using a single continuous line. A successful technical analyst trader will use line charts as a support system in addition to the main system, being either a candlestick chart or a bar chart. If one was to use the line chart as the main system, they will find many cons. For example, line charts are too simple, making it difficult to identify strong patterns. In addition, line charts lack information. For example, if you were to look at a candlestick chart, you will find the opening price, the closing price, the highest price, and the lowest price, and the same applies to a bar chart. A line chart, however, only displays the closing price, therefore lacking information. In addition, line charts provide false hope. The false hope comes from the information lacking. Because there is not enough information, people may presume that the price will go up when in fact, if that information that was lacking was present, the trader would then assume otherwise. And that concludes this lesson.